Know how to diversify well. You can reduce your risk without reducing your return. My boy Ray Dalio. This is why I'm giving you an update on the four pillars of investing to help with diversification. So the first one, of course, is businesses. Right now, where everybody's have seen this, but bankruptcies filings among the large companies have jumped over 244% in July and August compared to the same period from last year. Most of those bankruptcies right now are going to be your retailers, like your J.C. Penney's, but there are some big companies that aren't related to retail, like Virgin Atlantic and Virgin Australia. They never got their loan from the government that they were looking for. California Pizza Kitchen, Chuck E. Cheese, a lot of restaurants, Remington Gun Manufacturing, Circus Olay, and a bunch of rental car companies like Hertz. 6 months into the recession, and we have right now about 11.5 million job deficit. And then something cool that I've seen is StartEngine. So they're the equity crowdfunding platform. Just got approval to create a secondary trading market for startup crowdfunding companies. So what happens with those crowdfunding companies is you can purchase purchase a share in those startups, but you're just kind of stuck with it for 5 to 10 years. But now they're going to build out a platform that allows you to access to trade those shares within the secondary market. It sounds like a pretty good opportunity. Into the real estate market. So the national median home prices are up 10%, which is dramatic. They keep climbing even in a recession like we're in right now. The average rate on a 30-year fixed mortgage is now 2.86%, and at 15 years at 2.37%. Really, really low. New listings dropped 12% during this week of September 5th, or during this past week of September 5th. Residential shares of Fannie Mae and Freddie Mac loans in forbearance dropped for the 13th week in a row, down to 4.8%, which is a great sign, just showing that that's starting to get back on track. But Ginnie Mae loans, which cover your FHA and your VA loans, actually have jumped up to a default of 9.62%. So it's something to track. Commercial delinquency rates are up over 9% as well. So those are pretty high numbers. Zoom towns are the new hot market. So basically what that means is like a staycation place. So a place you can stay at that's away from people, but has a fun experiences such as like swimming, boating, hiking. That's what you're starting to see, this big trend of where everybody's going. A really cool analytic tool is called AirDNA. It gives you the average daily rent rate and the occupancy rate for Airbnb stays throughout the nation. It's a really cool tool. Next, into paper assets, so like your stock market. Ray Dalio, again, one of my favorite people to follow. Don't make the mistake of buying those stocks that recently went up just because you think they're better off than other markets. Gains are not bargains. So one example would be the tech market. So major tech shares have slid last week. NASDAQ had its worst week since March. Oracle won the bid to purchase TikTok and now has to get to the approval from the White House and China, and they have to do this by Friday. We'll see if this all pans out. This is really going to make Oracle's price change a lot on the stock market. The Fed will hold its last monetary policy meeting before the election next week. So one last meeting about where the money's going to go before the election happens on if Trump or Biden are going to win. The commercial paper market is something else to pay attention to. That's a market that has short-term debt instruments used by corporations to finance borrowing needs. So this is what froze up back in March and April. So that's what the government has been pumping a lot of money into. That's like the corporate bonds to keep it afloat. So that's also, it still is pretty screwed up. So we'll see what happens with that. Always invest long term and look at cost averaging to help offset those major swings in the market. Lastly, is you got your currency and commodity market. The reason to invest in these markets is to help diversify from other assets. So such as gold and silver can be a great hedge against massive printing. Investing in commodities like farms can be a great hedge as well. Just think, people always have to eat something. Places like Farmfolio, Harvest Returns, Farm Funder are some great crowdfunding platforms that allow investors to access farming and ag businesses directly. Lastly, A great way to track the US dollar is through the DXY, which is the US dollar index. It measures the value of the US dollar to a basket of foreign currencies. This can give you an idea of inflation by how far your dollar will go. Thanks for tuning in to Lead the Way Capital. Please like, subscribe, and share this video. Also send in questions if you'd like me to go over a specific topic. Thanks.